Do you want to know the secret to making consistent profits in the markets day in and day out? Well, you're not going to find that in this video, I'm afraid. So now that we've got that clickbait bullshit out of the way, if it's not your first week or even month in trading, hopefully by now you should know that making money in trading, it's not like having a 9-to-5 job and relying on that consistent, nice monthly salary coming in, right? And there's kind of three main reasons for that. One, we are dealing with random distribution, okay? So we will never know the exact sequence of when our wins and losses will occur. Secondly, we are dealing with market cycles, right? So the market is generally either trending or it's ranging, and some strategies do better in one than the other. And then the third one, if you are a manual trader and you're not using an algorithm to do your analysis and your execution, then your human performance is going to affect your results, whether that's because you're busy traveling or your job or your psychology is not in point for whatever stuff you may have going on in your own life, right? So anyway, those three things are all going to have an impact on your performance. But what I have found over the years of my own journey and mentoring others is that when things aren't quite, let's say, going in your favor and you take a few losses for any of those three reasons, that can obviously really hit your confidence, not only in your own ability, but in your belief in your strategy as well. And what I have found is the key is to not let that really negatively affect you, to make you dig yourself into that hole, so that when the good times are supposed to come, whether that's your wins coming through random distribution or the market environment being better, etc., that's when you need to capitalize on it. And it's the traders who are inconsistent that do not capitalize on those times. So today we're going to hop on the charts. We're going to go over some price action. We're going to review a recent trade that we've taken, but through the lens of really figuring out how to know when to put your foot on the gas and when to stay off, because I think that is the art of trading, of knowing how to do that and to help you break out of that break-even dance and start to make some consistent gains. Alrighty, so let's hop into the charts and break down a recent trade that I've taken from a completely blank chart so you can understand my full thought process. So this is the daily chart on euro dollar. So the first thing I always do from a blank chart is go to my highest time frame and figure out my bias from there and then work my way down. And on any time frame that I go onto, then the first thing I need to do is figure out what the current swing range is. And I do that by finding where was the last swing bar. So market structure is very clear at the moment on the euro dollar daily chart. As we can see, we are in a clearly bullish market, making a series of higher highs and higher lows. So like I said, what I want to do is find our most recent swing boss, which we can clearly see was over there. Now that I know we have that, we can now find our current swing high and swing low. So in a bullish market, our swing low is the lowest point that led to that break of structure. So this is a nice, obvious and clean one. This is clearly our swing low. Now, after a swing break of structure, what do we expect? We expect a swing pullback on that time frame, okay? So we have to start thinking in the back of our minds that after the swing boss, we could start to have that daily pullback kicking in. So we haven't yet had a shift in structure. We haven't had a bearish change of character or anything like that to signal that that pullback is going to start, but obviously we can use the lower time frames, which we'll look at in a minute. The next thing then we can look at is zoom out and see, are there any old supply zones to the left, as key levels that potentially may signal where that pullback may start from. So there's two things I look for, to suggest where that pullback may start. One is obviously opposing supply and demand levels. And then the second point will be key structural levels, as that is where there will be available liquidity behind those highs or lows in which pullbacks can start from. So very quickly, we just look left, we can see that the next unmitigated supply level on the daily chart for me is this level here, and we've obviously taken some liquidity behind these highs here too. So from a daily chart perspective, that's pretty much as far as my analysis goes. I'm expecting that swing pullback to kick in. We haven't yet mitigated this level of supply, so I'm conscious in the back of my mind that we may have another leg higher before we pull back, but I know that price doesn't need to do that, especially if we start to break down on the lower time frame. So let's jump down to the 4-hour chart and see what that is saying. Now, as soon as I go to the next time frame, do the exact same thing. Right, I need to find my current swing range. So to do that, what do you need to do? You need to find the last 4-hour swing break of structure. And if you're never not quite sure, kind of just zoom out a little bit and go to sort of the last obvious places. And as we can see here, right, we had an impulsive move up, we pull back, another bullish boss there, but then we shifted bearish. So let's zoom in a little bit. We had that pullback, and then we got another break of structure there, just about closing below that low. And then we got another pullback. Now here, we actually failed to close below this low. We had a wick break, which means there wasn't a swing boss there, which then means we shifted bullish here, okay? And then if I zoom out, since then, since we had the bullish boss here, which we'll draw on in a minute, we've had just one straight movement up, okay? So that's one swing leg for me, which means the last 4-hour break of structure was down here, okay? So I'm just gonna get rid of these lines now. So if I know that was the last 4-hour boss, we're then obviously bullish in a 4-hour chart. Our swing low is the lowest point that took out this high after it was printed. So anywhere between the high and where the break of structure occurs, the lowest point in that box is our new swing low, okay? So you can then draw this on to know where your current swing range is, which will be probably around there, okay? So let's just clean up these orange lines. So now we know the current 4-hour swing range we are within. Yeah, we can work this out. So we know after a 4-hour boss, same thing. What do we expect? We expect the 4-hour swing pullback. We also know from the daily chart we're expecting a pullback as well. So we have to have that in the back of our minds. We haven't quite yet reached that daily supply level, but what can we start to see with the recent price action? We can start to see structure shifting to the downside. So there's sort of two or three things I want to see to give me confidence to start to play those swing pullbacks, because obviously you are trading against the swing trend, right? So you don't just want to jump in on your lower time frame straight away and trying to short this. I prefer to wait for order flow to shift in my favor, okay? Now, what's great about this is back here, it was a bit subtle, but we did have, on that Monday, the 17th of July, we did have a bearish change of character where price broke this low, okay? But we don't just want to jump in on the first change of character. The second thing I like to see is a liquidation, right? So now that price has broken some structure, we know that that will induce buy side liquidity, okay, above those highs, right? Whether it's from people who are getting short, putting their stop loss behind there, or people who now see that as a significant level and they want to buy the breakout, okay? There's tons of reasons as to why, but when you get that break of structure, that is going to induce buy side liquidity above those highs, okay? So now we have a strong liquidation that is somewhat, significant of, inducing that liquidity into the market. Then once we get that liquidated, what do we see? We see nice big wicks coming into the market, and then we see another 4-hour change of character to the downside. Now, the reason why this is more significant when that happens, and why I'm more interested in now looking for sells, is because we've already had that liquidation. We've got a much more clearer idea of actually seeing demand fail and starting to see that order flow shifting from bullish to bearish, okay? You see that's a lot more significant. Got the liquidation confirmed with the demand failure and that shift in structure. So now potentially supply is going to start to take control, and obviously we get a nice candle closure there below the lows, just giving it a even more confluence. So now once we've got that, and we can start to think about playing those 4-hour and daily swing pullbacks, really the next key thing is to see, is supply going to hold? And in this case, this nearest supply level for me is the unmitigated extreme, because everything behind it is already mitigated. So now I have high confidence to want to look for shorts from within here to start to play that swing pullback. It's a nice sweep zone as well. So this is where we want to look to get short to see the continuation of this move. And I really, really actually like these types of setups, because even though they are counter the daily and the 4-hour swing trend, right? A lot of momentum to the upside. When you have this sort of price action where price is quite overextended, we've got the strong liquidation. We've seen order flow shift with demand failure. You've seen that structure shift as well. And also there's no significant demand nearby. And you start to get that kind of corrected price action within here with that sort of tight order flow, those tight ranges. I find this a very high probable environment to start to play those pullbacks, because, ideally, in theory, the best moves are when we get the pullbacks into well-priced demand, and we want to try and capture those higher lows and capture those next swing trends, right? Trying to get in these moves here. But sometimes those can be hard to catch, because sometimes price comes in and then it mitigates the level and it just flies with a lot of momentum. Whereas I actually find when you kind of get these overextended runs and you start to play those pullbacks, I just have a very strong edge in it. I have a lot of conviction of getting involved in this, which we'll talk about a bit more towards the end. So just going to quickly redraw this, because TradingView loves to not show my zones on the lower time frame on first go. And there we go. So M15, just going to hide this from the chart. Let's quickly draw our structure. So back here was a little bit messy. We had a bit of a pullback here, and then we got a shift in structure to the downside where we started to see that first signs of bearish pressure. Let me just zoom in a little bit. Okay, and then we chopped around for a bit, and this is when people start to get caught out, start to dig themselves in a little bit of a hole if their strategy is not suited to those tight range bound conditions. Okay, and then we eventually broke out there to the upside where we got a bullish boss, didn't close below that low, and then we got another bullish boss here, and then eventually we shifted bearish. Okay, and this is when the M15 swing structure shifted bearish, and then we started to see that 4-hour order flow shift bearish as well, after we had that 4-hour liquidation and that 4-hour demand failure there. So I'm just going to draw on this last M15 boss, okay, to the downside there. Okay, so now you start to see that alignment between the M15 and the 4-hour chart. Okay, we've then got a pullback on the M15 and another M15 bearish swing breaker structure to the downside, now giving us our clear M15 swing range, right? This is the M15 swing high that broke the low, so we know this is our strong piece of structure. We do not expect price to break this high if the M15 swing trend is going to continue, right? Because this high did what? It did its job. We had the pullback and it led to a break of structure. So now we expect price to pull back, but it shouldn't break this high if the swing trend is going to continue. So that gives us confidence to look to try and capture that lower high to play this to the downside, okay? But again, what gives us more confidence and kind of what the main theme and the main lesson I want you to take away from this breakdown is that when you have that alignment between the higher time frames, that is when you can really put your foot on the gas and trade with confidence, okay? But I'll talk about that a bit more as we get a little bit further into this. So what I'm gonna do is just gonna play price forward a little bit just to before Frankfurt Open, as that's just before my session. So 7 a.m. GMT, so UK, well not GMT, but UK time. I have to deal with daylight savings, which makes it a little bit more complicated with the whole time zone stuff. But yeah, basically before 7 a.m. London time is when my session starts, when I'm using my day trading strategy. So this is when I come to my desk and I'll see this and I go, right, let's go back to the daily chart. Daily chart, what are we expecting? We're bullish. We're expecting that pullback. We haven't yet hit daily supply and we haven't had a shift in daily fractal structure, but I know that we don't need to see one and price doesn't need to hit daily supply for that pullback to kick in. Okay, but I'm not just going to jump in straight away. I'm going to let the 4-hour chart give me some bearish signs. And what have we done, right? We've been patient. We've waited for people to get caught on the wrong side of the market, right? We've seen that strong liquidation, right? This was a high that broke the low. It's been liquidated. We've seen then demand fail. We've seen that order flow start to shift from bullish to bearish, right? We've got a nice candle closure there below the low, showing a bit more intent because it's been quite corrective so far. It's not super impulsive yet. And now we have a nice level of supply. And really kind of this supply has to hold, to expect for this pullback to continue. There's no nearby high time frame levels of demand for me to be concerned about shorting against, right? We have a lot of risk reward to try and play this pullback if it is going to occur, okay? So I'm very confident now to look for shorts whilst accepting the risk, right? That this might be a bit of a trap to have a bit of a pullback, push higher up into daily supply before we go. But if you're always waiting for the most perfect environment, right, you're never going to hit a trade, right? You always, your job as a trader is to be an analyst, to weigh up all of the positive confluence and all of the negative confluence, right? You build that portfolio of evidence, and then that's the analyst's job, right, is to do that. But then your job as a trader is to weigh all of that up and then make the decision, is there enough favor, enough probability to take this trade? Is the risk reward on my side for me to hit this? And if there is and it meets your plan, then that's when you get involved, right? You have to assume the risk in order to make the reward, okay? So for me, when I see this, I have very high confidence now to want to get, to take shorts, okay? And this is the type of environment in which if I take a loss, I'm not annoyed, right? I want to take losses in this environment, if that makes sense. Like I want to get involved because I know it's high probability for my edge and my approach. So knowing that and then seeing the alignment with the M15, okay, and this is what I see when I get to my desk. So at this point, the M15 swing structure is bearish. We know where our strong high is. If you want, you can mark out your swing range as it always helps you. This is where I use these templates as it can kind of help you to just keep a track of where you're targeting, right? So we always want to be trading from strong structure. So from the strong high, we want to be trading from here and targeting what? Targeting weak structure. Why is this a weak low? It's a weak low because it has not done its job. It has not broken the swing high, okay? So that's why we want to trade from strong to weak, okay? So at this point, we've clearly pulled back up to premium prices. I am conscious of the fact that we have not mitigated the extreme level of M15 supply. But again, I know that price does not have to hit those levels to continue. So I'm aware that we could get another leg higher, but I'm not too concerned. We have taken strong liquidity to the left, which is great. Okay, so most of the time, those pullbacks will end when it liquidates some strong liquidity. So that's another good sign the pullback may be finished. Okay, and we confirm the liquidation by seeing our demand zone fail, okay, and we're starting to see structure shift back in our favor here, okay. So let's just draw this all on. And what do we have? We have a flip, so you can draw that from the lower of the reaction to the top of the reaction, and you can see where demand has now flipped to supply. So for me, this is very, very clean. It's very clear structure. We have alignment with the M15 and the 4-hour chart. And by that, I mean that they are both showing that bearish order flow and we're looking to play the hard time frame pullback. okay? The M15 swing pullback is now looking like it's finished because we pulled back up to premium prices. There is supply behind it, but at least we've hit this level. We've had a strong liquidation. We've seen that demand now flip to supply. We've seen structure shift in our favor. So for me, this is a higher probable area, all right, to look for that bearish order flow to kick in to target that week low and beyond, right? If we're going to have that 4-hour and potentially daily pullback. So there's potential for a very big trade here. Now, the things I don't like about this is quite a sort of corrective, messy move. I don't really like it when price action looks like that. I much prefer when you kind of get that strong, sharper move away. But also, again, markets are, they're not perfect, right? You're not always going to get a nice, beautiful and picturesque setup, but everything else is there. Okay, so for me, this is a zone in which it's high probability. I'm happy to get short from here, and I accept the risk that this could just be, right, an internal pullback to then push up higher for another leg. And if that happens, fine, I'll take the loss and I'll look for another entry, if it meets my plan. Okay, so let's play price forward and see how we go. Okay, and then we pull back up into my zone. So very simply, just looking for that continuation to go. So if we drop down to the lower time frames, I'm not going to go too much in depth in the entry model, but basically looking for my liquidity requirements that I need to be met. So yeah, once we got that mitigation, I'm waiting for my entry model to play out. We got the signal that we need. I placed the order and then got tagged into the trade. I got tagged into the trade, and this is always almost the favorite time for that to happen, right? Where price literally tanks towards your target. Now, if we go back up to my medium time frame, the M15, all right, we've done the analysis. We know there is a ton of potential for this trade, right? To have that higher time frame pullback, or even if you're just targeting the continuation of this move, right? Even down towards the week low there's over 12 and a half are there with that trade. It's pretty well priced. It's within 4-hour supply. It's in the premium of the M15 swing range, right? There should be decent stock protection to look for that move. However, I just targeted a quick move at the recent M15 low to get in and out, as that just works very well for my psychology and my trading. Okay, I've spoken about this a little bit in the previous video. Like, when you're back testing or whatever, a strategy can be a lot more profitable when you back test it on paper, because you can target a higher risk reward and it can play out. But then when people try and execute it live, they can underperform it massively, right? Because their psychology can't necessarily handle it, or maybe they missed that one trade that's the big winner, because again, real life gets in the way, right? So for me, right now at least, it works very well for me to have those smaller targets, right? I think still over 3 hours an incredible return. And yeah, it works for me. It works for me really well. And I think a lot of people would probably get consistent or maintain consistency if you just keep, that bucket of dripping water, keep those drips. I'm butchering that analogy, but I think you guys are what I'm trying to get at, right? Just keep the consistency. It works really well, keeps your strike rate a lot higher. And yeah, so I left a lot of profit potentially on the table if I were to stick to, my directional outlook and my technical bias. But I have to do what works well for me, because the other thing is I take my profits. I'm a session trader with my day trading strategy. Price could easily pull back then, right? The next half an hour or so, tag me out for break even, and then go. Okay, so despite the fact that we played this forwards, that there was really nice clear bearish order flow, and price went continue down and even further than that, I'm okay with that. Like back in the day, that FOMO would have really hurt me. But actually, the way I see it is, you have to ask yourself, what I see it as, like, what's going to annoy me more? Is taking a break even in those scenarios going to annoy me more, or is seeing all of the potential profit you could have had annoy you more? And for me, it would be taking a break even would be a lot more painful than seeing price run away with me. I'm okay with that. I don't mind that. I'm much more happy knowing that I can do this consistently, banking those smaller returns, and it works well for me. Now, that said, if I continuously keep seeing that I'm leaving a monstrous amount of profit on the table, then I probably do need to, adjust my rules and work on that. But for right now, I'm pretty happy. Many of our members caught this and held onto the trade for a lot longer and followed their management rules, which is the most important thing. Okay, it's what you can do consistently day in and day out. And in my experience and from what I've seen, it's most of the amateur traders and the ones who aren't consistent are the ones that always try and swing for the fences. And they'll have a few home runs here or there. Maybe they'll fluke a funding challenge, but then they wonder why they lose it. It's because they're always trying to hit these home run trades. Okay, now there was another opportunity just coming into the New York session that met my plan perfectly. It was a beautiful trade, but I wasn't trading the New York session on that day. So yeah, but it would have been another nice opportunity to capitalize on. So to go back to kind of the key lesson that I wanted you guys to take from this video of what I was talking about at the start is what a lot of people do. We go back to the 4-hour chart, for instance. You can see there how much price is absolutely tanked, which it's a little bit painful, but yeah, it is what it is. What I was saying at the start, right, is maybe when things aren't going your way, whether it's just because of random distribution, whether it's because of, the market environment doesn't quite suit your strategy yet, or whether maybe you just haven't been performing right, you haven't been consistent with your own processes and, whatever. You need to recognize, I guess, when you're in those environments, right, when things aren't quite going your way, and be a bit more defensive. But then the key is, let's say, let's just keep it to technicals. Let's say then when, market's been range bound, it's been a bit slow, maybe like, for instance, like the last week or so, market's been impulsing up, not quite giving you the criteria that you need to get involved. And then what happens, right? For another few days, then the market's just moving sideways in that tight range. You haven't quite yet seen the confidence that you need in order to play the pullback, okay? And what happens is the people who aren't consistent is they get FOMO, they can't handle it, and they start doing their ass in here, right? Trying to play all sorts, trying to chase longs, trying to get in shorts too early, trading in the middle of the range, and they just dig themselves in more of a hole. Whereas if you're patient, you recognize that and you're used to it, you understand that the higher time frames move like cruise ships, right? The lower time frames, they reverse trends like you think like little speedboats in and out, whereas the higher time frames take time, right? They're like cruise ships trying to turn around, right? There has to build and accumulate and distribute those orders, get those liquidations in place, and then you start to see demand fail and order flow shift. If you can be patient and wait for that, okay, that is when you're going to get consistent. But the key is that, let's say you do get involved in here, it doesn't really matter if you take a few losses, whatever. This is that actual point that I'm trying to make here, is that when then you come to your desk and you see this environment of the trade that I just broke down, it's taking me a long time to get here. But now when I see that, I remind myself as like, right, come on, Matt, it's go time now. You have the alignment that you need. Everything is crystal clear. You have confidence in your directional bias. Prices pull back up to a high area of value. This is your time to put your foot on the gas. Do not be afraid of taking losses here. Execute flawlessly. It's go time. And I don't hesitate or doubt my approach in those scenarios. Whereas when it's back here, that's when, if I start looking at trades, I feel a bit uneasy because I know I shouldn't really be forcing things here. I should be a bit more patient. If a move goes without me, it's fine, right? But then when you get to these environments, this is then where before I would have taken maybe a few too many losses, my confidence would be a bit low. I think, no, I need to be a bit more patient now because I've taken those losses, when actually you need to do the exact opposite. You need to be getting aggressive, putting your foot on the gas. And for me, that's really what's taking my trading to that next level, to just know when to do that, okay? And I think if you don't have 100% mechanical strategy, I try and make my strategy as mechanical as possible, but there's a room for about 20% of discretion within there. And that's where this discretion gives you an edge. It's not to execute blindly and just keep following every entry model that, sets up when you have this environment. But then when you have the alignment, it's like, okay, now I'm going to be even more aggressive with my entry models, let's say, and get involved. And also to kind of talk more on that management point as well, where I've lost a lot of profit on the table. My lesson from this is when I probably should use a bit more discretion with my management. Look at the hard time frame situation and realize that there is massive potential for a hard time frame pullback here. I'm in a very well positioned trade. I should hold on to the trade and try and push this a bit further, right? That would be the main lesson I would have taken from this, okay? And you can see that when you get these environments, like we have nice trending environments for quite a while right here to the upside. And then for all of April, it went sideways. And if your edge is not very present or not very strong in those environments, again, people do their ass in here and then they don't strike with confidence when they get that nice trending environment again, right? And I see that again and again and again. Now, as many of you may know, we do have a full mentorship program here at Photon, where we have a super comprehensive course. We do session recap videos every single day. It's a massive community. We're getting insane results. You can see some of our case studies down here. It's just incredible. But we have recently just launched an analysis service. So this is for people who perhaps aren't ready for our full mentorship, or maybe don't need all of the services that we provide within that. So this is perfect for you, where you can get access to our daily analysis and markups for each session across 3 pairs. So come and take a look at that if you're interested. We've had loads of people benefiting massively from this, and we've got some great feedback and results already. So yeah, it's super incredible. So I hope you guys took some value from that. Really just, it's the art of trading, knowing when to put your foot on the gas, knowing when to step back a little bit. And if you can really nail that and take confidence from, when you see things aligned, do not be afraid to take losses in those environments, right? That is the key to really push and, be aggressive, as long as things obviously meet your rules. And I think that will really help you to maybe break out, of those dips or those break-even cycles that you may be finding yourself in. So yeah, hit the subscribe button, get a next look for our next videos next week, and take a look at these to make an instant improvement to your trading.